right?
Right.
If it stops working, now let me apply that mindset, but to the opposite, fashion, in inverse fashion. Okay, we were trending up, now we're not, right? We lost 4 hour 200s. The daily market structure is broken. The way that I drew my support level, it looks like we're below it, right? Oh, wow, those are all the same things that had me bullish on the way up. Now they're not true anymore. Let me flip and start to assume bearishness. And then it's like, okay. And then either from there, you're right, or you're forced to adjust, you're wrong, right? And then if it gets to the point where you're like, okay, I had this mindset, I was winning. So now it's not working anymore. It stopped working. It's now the inverse argument. Let me apply it there and see if I win. And then it's like, okay, wait, I was winning. I was winning. And then now I'm getting chopped. I'm chopped, right? We're bullish again. We're bearish again. 2 days later, we're bullish again. 2 days later, we're bearish again. Maybe it's not working anymore. Maybe I need to adapt and give myself a different way of approaching the market. So that happens frequently. And those are the periods where you can absolutely ruin all your gains and then some. It's those times where, and it happened in 2022 alone, twice or really three times, where we had a month-long range at minimum. So we had a month-long range, we had a 3 or 4 month-long range, and then we had a 5 month-long range. So if you're still applying a trend trader system during those range periods, your portfolio is not looking too hot, right? And that's the honest reality of it. You have to take on a different sort of adaptation. And the way that I do that is very arbitrary. I draw some boxes and I call it a range, and I say, hey, if it breaks out of this range, obviously, in order for us to break out of that range, we would have had to chop upwards and form some sort of weird trend within the range, except this time we're doing that outside of the range. Maybe this is the thing that dictates this time is different. And then from there, you're either right or you're forced to adjust. Oh my gosh, it fell back inside of the range. Look at that. That's a deviation. That's a fluke. That's a bull trap. That's a fake out. That's market manipulation. That's this. It's a liquidity sweep. It's this. It's that. Whatever you want to call it. You expected something, it didn't happen, now you're forced to adjust again, right? And then it's constantly, let me put on a position, let me take, a bias, and then let me look to actionably approach that bias per my system. And then either I'm right or I'm forced to adjust. If suddenly your system is failing you and you know that it's a winning system, that means that you need to stop applying it. If your approach stops working, you need to change your approach.
Got it. And it sounds like, a lot of it goes into like planning ahead and planning for different types of situations that can play out in the long run too.
Yeah, I always say that people are like, oh, so you give an analysis and you say something along the lines of like, if we reclaim the 4 hour 200s, or let me give you an example. If we come up into the 4 hour 200s as a bearish retest, that's the ideal place for us to find a local top and then continue lower and continue the downtrend. But if we reclaim the 4 hour 200s, that might mean that the bottom is in and we're going to break the daily market structure bullishly. It's like, that's a valid analysis. That's something that's actionable. You can play 4 hour 200s in that fashion and hope and pray that, price action is nice to you and rudder, rainbows and butterflies and dandelions, and gives you like a very actionable breakout, pullback, retest, and then, continuation in the event that those 4 hour 200 moving averages are reclaimed. But people will always follow that up with, oh, okay, so up or down. Thanks, got it. And it's like, that's a meme. It's like, you have to be prepared for both outcomes. You have to be at least able to acknowledge your primary analysis, but know in the event that it fails, what is the analysis that immediately follows up after that, so that you have the ability to adapt and adjust on a whim. Your job is not here. You're not here to bet on one direction or one outcome and hope and pray that the market gods are kind to you and follow through with that one outcome. That's exactly what ruined me in March of 2020, right? So it's like, you're here so that you have the ability to adapt and potentially grasp at opportunity when it's provided, regardless of direction. You want to preserve your capital for downside in the event that the 4-hour 200s break as trend support, as they did at 23K, 2 weeks ago. But you also want to get back in on the trend if daily market structure breaks and support levels are reclaimed, and that trend support is reclaimed as well. So it's like you just have to give yourself an actionable way of navigating the market. You don't have to only be able to look at things one way. You just have to be able to attribute a set of probabilities to something happening per your perception of those probabilities, and then be able to adapt if those probabilities don't play out in your favor.
Definitely. And I typically like to have like a best, worst, and base case. But yeah, Prasan, thank you for coming up. You can feel free to ask a question. You're on mute, by the way, if you're still there. Okay, I thought we had a question from someone in the audience. If anyone has a question, you can feel free to jump up and ask a question, or you can also leave a comment in the tweet for this Twitter Spaces too.